Welcome to the monthly report from the world of finance and economy. In this video, I will provide you with important news that affects world markets and the economy. My aim is to bring you relevant information and help you find your way in this complex world of finance. If you want to learn more information from real experts, check out the Rich Dad channel, which you have a link to in the video description. I hope this video provides you with useful information. America. Inflation in the U.S. Overall inflation, CPI, decreased year-on-year to 6.4% as of January 2023 from 6.5% reported as of December 2022. The estimated decrease was 6.2%. Total inflation, CPI, rose by 0.5% month-on-month. In December, it fell by -0.1% month-on-month. Ed Yardeni, president of Yardeni Research, said the road to lower inflation will still be bumpy, but he remains optimistic and thinks the numbers are moving in the right direction. However, Yardeni does not expect the Fed to cut rates this year. Ameriprise chief market strategist Anthony Sagline believes the Fed will have to consider longer rate hikes after yesterday's CPI, which is not what investors are hoping for. Other important inflation data was released in the U.S. The U.S. Central Bank Fed even considers the PCE index to be more authoritative than the Consumer Price Index, CPI, which is often more publicized. Indeed, core PCE rose by 0.6% on a month-on-month basis, while estimates from the Dow Jones surveys counted on a growth of 0.4%, i.e. the same as a month ago. The worst month-on-month numbers were followed by the annual ones, when the core PCE rose to 4.7%, while estimates counted on a decline to 4.3% from the previous 4.6%. The labor market in the USA. In the U.S., according to non-farm payrolls, which are published every first Friday of the new month, 517,000 jobs were created in January. That's much higher than the Dow Jones estimate of 187,000 and 260,000 positions created in December. Unemployment in the U.S. fell to 3.4%, while surveys expected unemployment to rise by 0.1% from December's 3.5%, to 3.6%. Current unemployment in the U.S. is the lowest since May 1969. Wages grew by 0.3% month-on-month, which was in line with expectations, and reached 4.4% growth year-on-year. It is more than estimates, 4.3%, but less than in December, 4.6%. The American Central Bank believes that the strong labor market, which these numbers also confirmed, contributes to the growth of inflation, and therefore it can evaluate these data as the fact that it must continue its strict monetary policy, i.e. further raising interest rates. By the fact that the labor market is clearly strong and resilient, at the same time the central bank may be more confident that even the continuation of its tight monetary policy will not shake the markets enough to send the U.S. economy into a more serious recession. Increase in interest rates. After the two-day FOMC meeting, the American Central Bank announced, according to assumptions, another increase in interest rates by 25 basis points. This number did not surprise, so the attention of investors was more focused on the following press conference of the head of the Fed, Jerome Powell, who injected more optimism into the veins of investors, which was reflected in the strengthening of the S&P 500, Nasdaq and Dow Jones. Investors largely chose from Powell's speech what satisfied them most with the current more optimistic mood on the stock market. Not everything Powell said matched their most optimistic ideas. Powell probably pleased investors the most with his statement, in which he acknowledged that inflation is really coming down and that there are positive signs in the labor market. Second, Powell pointed out that the Fed does not yet see disinflation in the services sector with the exception of housing, which is necessary, to be more convinced that price developments are going in the right direction, i.e. that price growth is clearly slowing down. Europe. Air transport is doing well. Air travel is reaching pre-pandemic levels, as confirmed by Air France-KLM, which said on Friday that its bookings for 2023 have almost returned to pre-COVID-19 numbers. Industrial production in the Eurozone fell. Industrial production in the Eurozone fell by 1.1% month-on-month in December, after growing by 1.4% in November. The industry of the entire European Union also fell by 0.4%. On a year-on-year basis, the industry of both the Eurozone and the European Union fell into negative figures. Eurozone inflation review. Inflation in the Eurozone finally fell to 8.6% year-on-year growth in January. In December, inflation in the bloc that uses the euro was at the level of 9.2%. As for the entire European Union, inflation fell from 10.4% to 10% year-on-year in January. The EU and the Eurozone avoided a drop in GDP. the Eurozone economy avoided recession in the fourth quarter, when it rose by 0.1% quarter-on-quarter. In the case of the entire EU, the economy stagnated, but it also did not fall into the red. It is necessary to add that in the third quarter the Eurozone and the EU grew by 0.3% quarter-on-quarter, which means that it slowed down in the last quarter. Inflation in the UK reached 10.1%. Inflation in Great Britain reached an annual level of 10.1%, which is a bit better than analysts expected, 10.3%. At the same time, this is a decrease from the December data on year-on-year inflation at the level of 10.5%. Inflation in the UK reached a 41-year record in October, when it rose to 11.1%. Core CPI, i.e. core inflation, fell to 5.3% from December's 5.8%. Unemployment in Great Britain remained at the level of 3.7%, where it has been for 3 months. It was the lowest in 50 years at the level of 3.5% in August 2022. Jeremy Hunt, UK Chancellor of the Exchequer, said the figure was an encouraging sign of the resilience of the UK labour market. Zero emissions for cars. The EU Parliament approved zero emissions for new cars from 2035. The agreement may have a negative impact on the automotive industry. It still needs to be approved by the EU Council. Inflation in Germany. Year-on-year inflation in Germany increased to 8.7% in January from December's 8.6% year-on-year. Analysts, however, expected somewhat worse numbers, closer to 9%. Consumer prices in Germany, CPI, rose by 1% month-on-month in January, which has a negative effect especially in the context of a month-on-month decrease of 0.8% in December. But then the German government helped with subsidies for gas and heat bills for households and small and medium-sized businesses. It is important to note that, using the same methodology as the European Central Bank, inflation in Germany fell to 9.2% from December's 9.6%. Analysts expected a return to 10%. The ECB raised rates and chose a strict tone. As expected, the European Central Bank yesterday raised interest rates by 50 basis points, bringing its key rate to 2.5%. In a statement after this decision, the ECB also stated that it remains on the established course of significant rate increases and announced in an unusually unambiguous manner that it intends a further increase of 50 basis points in March. The ECB has raised rates 5 times so far, after 4 increases of 50 points in 2022. ECB Chief Christine Lagarde et al. Thus making it clear that the fight against inflation is not over, despite January's preliminary data from Eurostat indicating that it is moving in the right direction. Unemployment in the Eurozone did not change and remained at 6.1%. The Turkish Central Bank has cut rates. The Central Bank of Turkey cut rates by 50 basis points to 8.5%. She did so despite the fact that inflation in Turkey is still extremely high, according to the latest figures at the level of 57% year-on-year growth. The European Commission has banned TikTok employees. European Commission employees are banned from using the Chinese social network TikTok on their official mobile phones. Eurocommissioner Thierry Breton justified it with a cyber threat. The restriction also applies to their private mobile phones if they use work applications on them. Asia-Pacific region. Australian PMI again below 50 points. In Australia, the Purchasing Managers Index was also published, which reached the level of 49.2 points, which is below the level of 50 that separates decline from growth. However, this is a higher number than in January, when the index was at the level of 48.5 points. The index is below the threshold of 50 points for the 5th month in a row. Index of Purchasing Managers in Japan. Japan's Jibun Bank published its Private Purchasing Managers Index, PMI, which fell to 47.4 points from the previous 48.9 points. The 50-point line separates decline from growth. However, the service sector strengthened to 53.6 points against 52.3 points in January. PBOC left base rates unchanged. The People's Bank of China, POC, left key interest rates unchanged. The 1-year rate remains at 3.65%, while the 5-year rate remains at 4.30%. Inflation in India rose faster than expected. Inflation in India reached the level of 6.5% year-on-year growth in January, significantly rising from the 5.7% reported in December. At the same time, these figures from the second most populous country in the world exceeded the estimates of economists, who only counted on growth of 5.9%. Kazuo Ueda, the candidate for the new governor of the Bank of Japan, expressed his support for the central bank's current monetary policy despite its many side effects. The Bank of Japan is pursuing an ultra-easy monetary policy without raising interest rates, stimulating the Japanese economy. Regarding inflation, according to Kazuo Ueda, it is important to wait and achieve stability in a sustainable and stable way. Ueda's comments come as Japan's inflation has hit a 41-year high. According to the latest Consumer Price Index, CPI, it reached 4.2% year-on-year growth. Japan's GDP grew more slowly than expected. Japan's GDP grew last quarter on an annualized basis by 0.6%, which is less than the Reuters poll expected, 2%. This figure follows a revised 1% year-over-year decline in Japan's third-quarter GDP. Chinese CPI at 3-month high. Consumer prices in China, inflation, according to the latest CPI, rose by 2.1% year-on-year, the highest figure in the last 3 months. However, the growth of 2.1% is lower than the analysts expected in the Reuters survey, 2.2%. On a monthly basis, prices in China rose by 0.8%, which is the number that was expected. Prices in China appear to be rising due to slackening consumer activity following the easing of zero-COVID measures. Japanese wholesale prices. Wholesale prices in Japan, according to the Corporate Goods Price Index, CGPI, rose 9.5% year-on-year in January, down from 10.5% growth in December. This figure was also 0.1% lower than expected by Reuters based on your research. The CGPI measures the wholesale prices that companies charge each other for goods and services. India may extend wheat export ban. India may decide to extend a ban on wheat exports to replenish state reserves and lower domestic prices. The ban is in place from May 2022 in response to a heat wave that has curbed production and raised domestic prices. Adani dropped out of the top 20. Adani Group founder and chairman Gautam Adani's net worth has fallen by nearly $60 billion to a current estimate of $63 billion. Adani thus fell out of the top 20 list of the richest men on the planet according to the Bloomberg Billionaires Index. Until recently, he was among the top 3 richest people and was at one time the richest businessman in Asia. The latest news that Adani Enterprises will be removed from the Dow Jones Sustainability Indices contributed to a further slump in Adani's estimated fortunes. The decision came after serious allegations surfaced from investment and research firm Hindenburg Research suggesting that Adani Enterprises' parent, the Adani Group, had manipulated shares and committed accounting fraud. A few days after the first reports of possible manipulation and fraud at the Adani Group, Gautam Adani issued his first public statement yesterday, saying that the company's balance sheet is healthy and the stock is robust. Adani Group shares have already fallen by more than 50%. China continues to open up. Hong Kong and Macau have fully opened their borders with mainland China, another step confirming that China is backing away from its strict zero-COVID policy. An official statement said mandatory tests for most travelers to mainland China would be lifted and group tours between the regions would also resume. Earnings. Spotify, the largest streaming audio platform, reported a 14% rise in subscribers to 205 million, beating analyst estimates and doing the same for its Q4 revenue. In total, Spotify already has 489 million clients and expects this number to rise to 1 billion by 2030. General Motors, which returned to the position of the car market unit in the USA. The American automaker reported that its net profit fell by 0.8%, but its sales rose by almost a quarter to $157 billion. GM's net profit rose 15% year-over-year and quarterly sales rose 28%. PayPal is next on the list of those planning significant layoffs. According to the latest information from the Reuters agency, this IT company will lay off up to 7% of its workforce, justifying it by the slowdown in economic growth. Meta. Mark Zuckerberg's company pleased investors by announcing better than expected results for the fourth quarter and also by planning a share buyback of up to $40 billion. In 2022, Meta bought back shares for $27.9 billion. Earnings per share were $1.76 and sales were $32.17 billion. Apple's total sales last quarter were about 5% lower than in the fourth quarter of 2021, marking Apple's first year-over-year sales decline since 2019. Apple CEO Tim Cook said 3 factors mainly affected the results: a strong dollar, manufacturing problems in China affecting iPhone 14 Pro and iPhone 14 Pro Max production, and the overall macroeconomic environment. Apple's revenue was at the level of $117.15 billion. Earnings per share were $1.88. Amazon. In particular, sales beat expectations at $149.2 billion versus $145.42 billion estimated by Refinitiv. Amazon Web Services missed the expected numbers, but Amazon's ad revenue was higher than Street Account estimated. 2022 was Amazon's worst growth rate in 25 years, as its revenue grew only by 9%. Inflationary pressures and rising interest rates, which slowed down consumer spending, contributed to this. Amazon shares nearly halved in 2022. Elon Musk and Tesla revealed when they will present the revolutionary Master Plan 3. It is more or less certain that Tesla will continue with the thesis of a path to a fully sustainable energy future for the Earth, with Musk saying that the future is bright. And adding that the updates included in this version of the master plan will also include information about the other two companies, SpaceX and the Boring Company. SpaceX specializes in the production and operation of spacecraft and rockets to provide affordable access to space, manned landings on the Moon and subsequently Mars. The Boring Company is engaged in the construction of underground tunnels for the fast and safe transfer of people and goods in cities, but unlike the successful SpaceX, which has huge recognition, it is not so much burning with its progress. Tesla also announced that it will reveal new details about its vehicles and also the shared taxi during the Investor Day event. It is certainly expected that it will also include the use of increasingly advanced artificial intelligence, AI, which has become a buzzword in recent months after the unmissable arrival of ChatGPT from OpenAI. Just to illustrate, Elon Musk was one of the first investors in OpenAI, but later left the company. eBay is going to lay off people. eBay plans to lay off 500 employees, which represents about 4% of its workforce. The company informed about this in a notification to the American Securities and Exchange Commission. Yahoo another layoff. The American internet company Yahoo has announced that it has to lay off more than 1,600 people, or about 20% of its employees. The layoffs will mainly concern the workforce as part of the major restructuring of the advertising technology division, which will affect up to 50% of the staff. The company seems to have given up the fight to gain a stronger position in the digital advertising market, where it competed with giants such as Google and Meta. PepsiCo. Although the company announced that its profit fell by 61%, the results were better than analysts' expectations. PepsiCo also announced that it will increase its dividend by 10%. The company's forecast looks worse towards 2023, in which it expects a drop in demand due to general price increases. The Coca-Cola Company increased its quarterly operating profit by 24% year-over-year to $2.1 billion and its sales rose by 7%. The company also announced that it raised the prices of its products by 12% in the fourth quarter, which it could afford due to its dominance in the market. Italian automaker Ferrari announced a 16% year-over-year increase in its adjusted profit and announced during earnings quarterly results that 2023 could be even better. The company said its adjusted earnings before interest, taxes, depreciation and amortization (EBITDA) reached €1.77 billion, $1.95 billion, last year, while setting a 2023 estimate of up to 2.13 to 2.18 billion euros. Volkswagen's profit and sales increased in 2022, which was mainly contributed by higher selling prices of cars. The sales of the largest European car manufacturer reached €279 billion last year, which is an increase from €250 billion in 2021. The company's operating profit rose to €22.5 billion against €20 billion in 2021. These are preliminary results. They will be officially published by the company on March 14. The European Commission does not like Amazon's plans. The European Commission wants to investigate Amazon's plan to buy Rombo robot vacuum maker iRobot for $1.7 billion. This acquisition is also being handled by the U.S. Federal Trade Commission. The reason for the investigation is concerns about the possibility that Amazon will increase its market power in the segment of home appliances and the collection of user data. In earnings, German bank Allianz announced a net profit of €2.13 billion, while a year ago in the same quarter it achieved a loss of €292 million. Alibaba Company reporting better than expected third-quarter results. For the quarter ended December 31, Alibaba reported revenue of $35.92 billion, up 2% year-over-year. Several Chinese apps had to restrict access to chatbot ChatGPT, an artificial intelligence from OpenAI in which Microsoft invests. The Chinese authorities labeled ChatGPT as a supporter of American propaganda. Rolls-Royce beat expectations during earnings, announcing a 57% year-over-year increase in underlying profit. The latter was driven mainly by civil aviation and energy systems. The firm posted an underlying profit of £652 million in 2022, up £238 million from 2021. Rolls-Royce also benefited from a recovery in demand for international travel thanks to the easing of COVID-19 measures. If you are interested in multi-level marketing or want to buy some products or support this channel, there is a link on Amway in the video description. If you like the video, give it like, subscribe and turn on the bell. And don't forget, money is freedom. And keep learning.